Welcome back to your daily dose of crypto news. Buckle up because today's got some regulatory rumbles, market movements, and a hefty legal sentence. First up, Coinbase is firing back at the SEC, accusing them of overreach and failing to follow proper procedures in the Wells notice process. This legal battle could have significant implications for the crypto industry as a whole. Meanwhile, Bitcoin's price is still on a roller coaster ride, hovering around $62,000. Some analysts are predicting a potential sell-off, while others remain cautiously optimistic. Stay tuned for our in-depth analysis of the short-term price outlook. Speaking of legal troubles, the developer of Tornado Cash has been sentenced to 64 months in prison for money laundering. This case raises concerns about the future of privacy-focused crypto tools and the potential for regulatory crackdowns. In the world of ETFs, the Hong Kong Bitcoin ETF has seen its highest daily outflow, while its U.S. counterpart remains relatively stagnant. This could be a sign of investor uncertainty or a shift in preferences towards alternative investment vehicles. On the mining front, Bitcoin miner revenue has taken a significant hit, raising concerns about the profitability of mining operations. This could lead to a consolidation in the mining industry and a potential shift towards more efficient mining methods. Finally, the state of Wisconsin has made a bold move by investing over $163 million in Bitcoin spot ETF shares. This could be a sign of growing institutional interest in cryptocurrencies, but it's important to note that this is just one state and not necessarily representative of broader trends. That's all for today, crypto enthusiasts. Stay tuned for more updates, and don't forget to hit that subscribe button to stay ahead of the curve in this ever-evolving crypto landscape. Hey there, let's dive into the latest buzz from the financial world, shall we? Welcome to Whiteboard Invest, your #1 go-to source for clear and concise investing knowledge explanation and news updating daily. Hey, have you been keeping up with the Coinbase versus SEC drama? It's like a legal thriller, but in real life. So, Coinbase's legal head honcho, Paul Grewal, is pretty miffed with the SEC. He's calling them out for not playing by their own rules with this Wells notice thing. Basically, Coinbase is in the dark about which of their assets are supposedly stepping over the securities line, and that's a big no-no. It all started when the SEC threw a lawsuit at Coinbase last June, accusing them of dealing in unregistered securities since 2019. Fast forward to now, and the SEC is trying to shut down Coinbase's appeal. Talk about a cliffhanger, right? But wait, there's more. Remember that case against Debtbox where they were accused of scamming investors out of a cool $49 million? A judge in Utah slammed the SEC for going all power trippy in that case. And get this, 2 SEC lawyers who were leading the charge actually quit over it. The SEC did fess up to cutting corners with Debtbox, not following their usual Wells notice playbook. That's got a lot of folks wondering if the SEC is playing fair with everyone or just picking on the crypto crowd. Robinhood and Uniswap got similar notices from the SEC, and they're not exactly thrilled about it. Rodrigo Silva Herzog from Cooley LLP even said the SEC's on a carpet bombing campaign against crypto. And Hayden Adams from Uniswap? He's super annoyed, saying the SEC is attacking the good guys without setting clear rules for the crypto world. So, this whole Coinbase versus SEC thing isn't just a legal spat. It's a sign of the growing tension between U.S. regulators and the crypto industry. It's making everyone ask, is the SEC being fair and transparent, or are they just throwing their weight around? Before we dive into today's next market-breaking news, make sure you hit the like button and subscribe to our channel to fuel us up for even hotter content than ever. Today, Bitcoin is still in a price correction phase, hovering around the $62,000 mark. It may take some time for Bitcoin to break out of this price range until the U.S. government makes new decisions or the presidential election is over. Let's stay tuned and see what happens next. All right, let's chat about the Bitcoin and Ethereum ETF scene. It's been kind of a snooze fest lately, both in Hong Kong and the US. So, picture this. Since the end of April, the Hong Kong ETF market has been like a ghost town, but it's still under the market watcher's microscope. On May 13th, the market had a record-breaking bad day with a massive outflow of 519.5 BTC, which is around 32 million bucks. And that's not all. Just a few days before, nearly 100 BTC said bye-bye too. It's been a bit of a downer with 3 consecutive days of cash flying out the window. Now, if we peek at the total BTC held by these ETFs, it's a mere 3,560 BTC, barely touching 220 million USD. That's peanuts compared to the big boys in the US. Market. Speaking of which, across the pond, the US Bitcoin ETFs aren't exactly setting the world on fire either. The total inflow for all 11 funds was just 66 million USD, with only 3 funds, FBTC, BITB, and HODL, making any waves. And get this, Grayscale's GBTC, once the king of the hill, clocked in a whopping 0 in activity. The lackluster ETF action is totally mirroring Bitcoin's price, which is just chilling around 62,500 USD, up a tiny 3% in the last day. Ethereum isn't having a party either, stuck trading below 3,000 USD. The Hong Kong Ethereum spot ETFs are feeling the blues too, with an outflow of 2,270 ETH or 6.6 million USD. The whole market's ETH stash? Just about 40 million USD. So there you have it. The crypto ETF market is more meh than yay right now, and it's got everyone watching their crypto wallets a little closer. So, you've heard about the Tornado Cash whirlwind, right? Alexei Pertsev, one of the devs, just got slapped with a guilty verdict in the Netherlands for laundering a whopping $1.2 billion. And that's not all. His buddy and co-founder Roman Storm is in hot water in the US and is bracing for his own courtroom showdown in September 2024. Here's the scoop. Pertsev got hit with a 64-month jail sentence, which is like 5 years and a bit. His legal eagles have 2 weeks to appeal, but the clock's ticking. The court's basically saying he and others washed a ton of dirty ETH money, even though Tornado Cash is a mixer protocol that doesn't hold on to the crypto itself. Talk about being in a tight spot. Pertsev got nabbed back in August 2022 after Uncle Sam blacklisted Tornado Cash. The indictment hinted he should have smelled something fishy with some of the transactions on the platform. But there's no hard evidence he was actively helping out the bad guys, other than contributing to the open-source code of this infamous mixer. This whole mess has the open-source dev community biting their nails, because it could set a nasty precedent. It's like being punished for creating something that crooks end up misusing. Back in March 2024, prosecutors argued that the Tornado Cash devs didn't put up enough guardrails to stop illegal money laundering. They're pointing fingers at some big-time hackers, like the state-backed Lazarus Group from North Korea, as frequent flyers of the Tornado Cash service. Meanwhile, Storm's gearing up for his day in court in the U.S. Last year, the American prosecutors threw the book at him and his co-founder Roman Semenov, accusing them of money laundering conspiracies, sanction violations, and running an unlicensed money-moving biz. Semenov's still playing hide-and-seek with the law. Storm's lawyer is swinging for the fences, trying to get the charges dropped by playing the free speech card. They're saying that whipping up open-source projects is like speaking your mind. Some big crypto groups in the U.S., like Coin Center, the Blockchain Association, and the DeFi Education Fund, are backing this play, claiming the government's charges are full of factual and legal holes. It's up to the judge to call balls and strikes on this one. A spokesperson from the DeFi Education Fund is bummed about Pertsev's verdict, but doesn't think it'll rain on Storm's parade in the U.S. They're arguing that the government's theory to pin the blame on Roman is uncharted territory. The charges suggest that if some shady third party uses open-source software for no good, years after it's made, without any direct or active interaction with the devs, the creators could still end up behind bars. That's a scary thought for anyone in the tech world. It means you could get locked up just because some villain misused your open-source software. Peter Van Valkenburg from Coin Center is down in the dumps about Pertsev's verdict. He says it doesn't really touch Storm's case, because the legal ground rules between courts are pretty different. He thinks it's bonkers to hold devs criminally responsible for building software and publishing websites. Van Valkenburg's first reaction? Super sad for Alexei, who might be facing some serious jail time. He's also sounding the alarm about the potential legal fallout for software devs all over the Netherlands and Europe. Here's the lowdown on the Bitcoin mining scene in May 2024. It's not looking too hot. The miners' wallets are feeling a bit lighter these days. Why? Well, the Bitcoin they're digging up isn't fetching as much cash as it used to, and the tips they pocket from transaction fees are also on the down low. The brainiacs over at Kaiko, the crypto research gang, are saying this cash crunch might push miners into a corner where they'll have to offload their Bitcoin stash. And if that happens, it could send shockwaves through the market, especially when it's already as dry as a desert. Here's the kicker. Bitcoin's got to stay above the $80,000 mark to keep the mining gig profitable under the current squeeze. But with the way things are going, a fire sale could be on the horizon if the price keeps playing limbo. Let's rewind a bit. Before the halving event, that's when the mining reward gets chopped in half, miners were raking in the dough. On April 20th, they hit a jackpot with $107 million in a single day, thanks to a surge in transaction fees and the buzz around the new Runes protocol. But post-halving, the daily take-home has nosedived to about $26.3 million at the start of May, hitting a yearly low. Miners aren't just sitting ducks, though. They're beefing up their rigs to cut costs and stay in the game. Take Bitfarms, for example. They threw down a cool $240 million to triple their mining power to 21 EHS and boost efficiency by 40% compared to the good old days before halving. But here's the real deal. Bitcoin's price swings are making miners sweat. When the price takes a dive, they might have to sell quick to avoid bigger losses, which only adds more fuel to the fire sale frenzy. Crypto quants number crunchers say that to keep the lights on, Bitcoin's price needs to hug that $80,000 safety line. So that's the scoop. Miners are in a bit of a pickle, and if Bitcoin doesn't start flexing some muscle soon, we could be in for a wild ride. So, the folks over at the State of Wisconsin Investment Board, SWIB, have been doing some shopping, and guess what's in their cart? A whole bunch of crypto. They've splurged over $163 million on Bitcoin spot ETFs. Yep, you heard that right. The same crew that looks after the retirement funds and trust funds for the cheeseheads, that's what they call people from Wisconsin, right, are now getting their hands dirty with Bitcoin. In their latest SEC report, SWIB wasn't shy about their new love for digital gold. They snagged 2.45 million shares of BlackRock's iShares Bitcoin Trust, IBIT, worth a cool $99.1 million, and another million-plus shares of Grayscale's Bitcoin Trust, GBTC, valued at $63.6 million. And all this crypto action went down in the first quarter of 2024. This isn't just a fling, though. It's a full-blown strategy to mix things up in their investment portfolio and ride the crypto wave. It's like they're setting the trend for other state investment boards to follow suit. But wait, there's more. SWIB's also got stakes in other crypto bigwigs like Coinbase, Marathon Digital, and a few more. And when it comes to the Bitcoin spot ETF market, IBIT and GBTC are the big fish, dominating the trading volume. Now, this move has got some eyebrows raising. Bloomberg's ETF guru, Eric Balchunas, was pretty surprised to see a pension fund diving into a Bitcoin spot ETF. It's not every day you see these big players in the 13F reports. But hey, if Wisconsin's doing it, it might just be the signal for others to jump on the bandwagon. And speaking of bandwagons, New Hampshire's state rep, Keith Ammon, is already mulling over whether they should get in on the action, too. He's thinking, what if just 1% of their retirement fund's assets, which is around $5.5 billion, went into Bitcoin? That could tighten up the supply and give Bitcoin prices a nice little bump, especially since the current mining output can't keep up with that kind of demand. Traditional institutions are lining up to get a piece of the Bitcoin pie, and ETFs like IBIT and GBTC are making it a whole lot easier. And get this, IBIT broke records by hitting $10 billion in assets under management in just 49 days after its launch. That's like breaking the sound barrier in the ETF world. So, there you have it, a casual take on WIB's crypto investment strategy.
Alright, that's hottest news today. If you guys did find this video helpful, leave a like and subscribe our channel for more free content. Thanks for watching. Peace out.